I would say the driver has been the very careful design of this fund. It's very different to other funds in the sector because it's long only. And we thought long and hard before we launched the fund. We think shorting credit is an incredibly difficult skill. We thought if we make it long only, it's going to be easier to understand and will actually work throughout the cycle, provided we keep it constrained to low risk investments. Q4, I think, was really dominated by the risks of a Fed policy error. The markets really gave Jerome Powell a bloody nose in our view because he had suggested that rates weren't high enough. On the back of the volatility we saw in Q4, many opportunities arose, which we started taking advantage of in December. We started adding risk in December. In January, when Jerome said that QT might even be paused, we've seen this fantastic risk bounce, and the fund has taken advantage of that. I would say 2018 was very challenging for reasons related to correlation. I found last year, throughout most of the year, excepting December, you saw a positive correlation between rates, markets and credit. Traditionally, you don't see that over such a long time frame. That made it very difficult to manage your risks appropriately. And then within credit, we saw a negative correlation between banks and insurers, which again is very unusual. So overall, I would say 2018 was a very challenging year. Well, one of the most common questions I get from my European investor base is the threat of Brexit to returns. And we would say the noise around Brexit has been very unhelpful. Provided you position your portfolio in very short-dated credit, we think you can benefit from the very attractive Brexit premium without being exposed to the significant Brexit risks from longer-dated credit. So I would say the noise has really focused investors away from UK sterling-denominated credit, and that's our favourite asset globally at the moment. It's two things really. Firstly, it's recognition from industry peers that we're doing the right thing. And secondly, that within this specific sector, it's called absolute return, but it's a long-only fund. And I think it vindicates our decision to have a long-only fund in this sector.